Welcome to KeyLadder. We're here today to talk about KeyLadder's Wealth Builder program for residential real estate investments. This is a turnkey program that's designed to help you diversify through the creation of a business focused on the acquisition of residential real estate for the purposes of building long-term wealth while providing short-term income. It's not just about acquiring a property. It's about creating a business to do that. KeyLadder clients generally have full-time occupations. They desire to earn returns in excess of the stock market or cash investments. They wanted to diversify their investment portfolio. They require short-term income in some cases. Others prefer to build wealth for years to come as in addition to retirement income. Some want to avoid the volatility of other investments, and many have no time to search, analyze, acquire, and manage properties, even if they had the skills to do so. If it seems that you may fit into any one of or all of these criteria, you'll be a good candidate for the KeyLadder Wealth Builder program. The essential elements of the program focus on residential rental properties. That's single and multifamily. A single property is presented to the client for consideration. We don't present many properties. There's no shopping. That's the whole point of the program. That's what we do, is to present a single property that meets the requirements. Financing is arranged through a KeyLadder strategic partner. Closing is scheduled and details are monitored through the process. Property is expertly managed by another KeyLadder strategic partner. We create an LLC unless there's a preference not to have one, and then we will actually move the property to the LLC at closing or after closing. Recommendations to the CPA to ensure that tax law advantages are employed as part of the program. There are many ways to make money in this program, and one of them is, of course, taking advantage of legal tax requirements. Forecasts and budgets are presented covering the next 5 years, and an ongoing reporting process from the property manager will keep our clients up to date on all activities regarding this investment. We'll start with goals. We can't understand what you want unless we hear from you as a client about the goals that you want to achieve. And if you don't know what those goals are, we'll step you through the process. So here's an example. A short-term goal might be 8% cash-on-cash return. Now that's simply monthly income from rents after all expenses. Long-term, you might want a 75% 5-year return on investment. You might want more than that. You might be satisfied with somewhat less than that. The same with the cash-on-cash return. These are your goals, not ours. Buy, turn, and hold. You may prefer to buy and hold for 5 years. That's our recommendation. But if you want to buy and hold for a year or 2 years or 10 or 20 years, that's certainly up to you. And we can show you what that looks like. We need to discuss the amount that you want to invest. Now, preferably, you want highly leveraged investments. Now, if it were just simply purchasing with cash, there wouldn't be a need to go through some of the activities that we do. But to go in highly leveraged means that your return on investment will be higher. So calculate about 25% for the typical down payment. Sometimes it's a little less than that. It depends on the type of property that's being purchased. If you have no preference for single family or multifamily, then we need to know that too. And we prefer to work with people that don't have a preference. It's all about achieving the return, dollars and cents. We'll acquire additional properties in the future. That's our typical clients do want to do that. Sometimes this is the first opportunity, so they want to see how this works out first, which is a good idea. But we need to know what your goals are in the future. And as part of the goal-setting process, of course, we need to understand your credit situation up front. That determines how much you can buy, how often, the interest rates, all of that goes into our calculations. We start with an interview. The program starts with the interview of the prospective client, which hopefully is you. The interview helps to determine for both parties if the KeyLadder program is the right program for our client. The interview will consist of the following and some other items as well. It'd be a general discussion that we'll have. When do you plan to start with KeyLadder? Do you have a credit score of at least 675? And that's important. It's difficult to work with individuals that have credit scores that are much lower than that unless they have cash and don't have debts. Then it's a little bit easier. But this process is really designed for people who have the funds to go forward with good credit, and it makes the process a lot simpler. Are the assets for investment liquid? In other words, you don't have to go out and sell a house to get it. And if you do, that's fine. Then you need to adjust the time period when you start the program. Your personal credit situation good? No liens, no judgments. That's one of those things that comes up sometimes where people hadn't thought about it. And just as the offer is made or during the process, someone is found to have a lien. We're just going through that right now with some of our clients who were prepared to buy property to find out that one of the owners has an IRS lien that no one knew about. And that's held up the closing for a couple of months, and probably that deal will not go through. So a lot of work goes into that. It's important to understand that up front. And you have 6 months of liquid assets to support the mortgage payments for the selected property. Not just the mortgage payments, but any other payment as well, such as utilities if the property is vacant, any maintenance costs, those kinds of things. And you may never need to spend that money, but you're going to need to show that you have that for the mortgage company. The next step is the analysis. KeyLadder employs a proprietary system to perform an in-depth analysis of potential properties before a single property is offered to a client. We review many properties that are listed and properties that are unlisted. We work with a lot of real estate agents and others. Sometimes we know of properties that are not listed, waiting for the right opportunity to come by where we can put one of our clients into that property. There are properties listed not just in the area that we prefer, which is in the South Mississippi area, but we can find properties in other areas as well. And we'll go through that later in this, that it doesn't make any difference or should not make any difference to you where that property is located in the United States, as long as it makes money and meets all of the other requirements. So we narrow down to about 3 potential properties. We verify the income through rent surveys, and our rent surveys are exhaustive. We don't do 2 or 3, which is typical for most financial organizations that are looking at supporting a loan on these properties. We may do 5, 10, 15, as many as 17, 18 to make absolutely sure that the rents that they're inserted into our analysis are reasonable. So we have a formula for doing that as well. We certainly don't put the highest ones in, and we don't put the lowest ones in. And it may be that rents can't change immediately for a specific property because there are people renting it. So we have to insert in the analysis the appropriate rent range for the time the property is being purchased, and then show that later on that return on investment will increase. We obtain detailed information from the seller agent on our shortlist, and that's important. There are a lot of things. If this is a property that was on the multiple listing, more often than not, there are many items missing. So we do an interview of the agent generally, and the agent usually doesn't have the information, so they go and get the information from the seller. Sometimes it's difficult to come by, and it takes a little bit of time to be able to gather that information. For example, what are they paying for water? if water is included in the rent. How long have they been paying for that? We'd like to see a 12 months worth of payments for that. The real estate taxes, we can look into those and we can understand the tax rates, but if they've owned the property for a long time, we'd like to see what type of increase or decrease in taxes have happened over a period of time. We select one or two from the properties on our short list, and the real estate agent who is working with us, one of our strategic partners, will visit the property and review it for suitability, determine a rough estimate of any repairs. Prior to that stage, all we've done is looked at where the property is located, the value of that property, all of the statistics that go into our analysis to determine return on investment, and then at this stage it's time to actually set eyes on that property with a professional that understands what they're looking at. We get a rough idea if there are repairs. If there's too many repairs, we're going to scratch it off the list. Now, we believe in most cases by this stage we would have already known that through our information received from the seller agent. But we take another look at it just to make sure. It has happened that the sellers or the agents have just overstated a little bit how much work had to be done in the property. And we decided that either that would work for our client or it's too much work. The final selection is made. Analysis will be produced and presented to the client by the agent. Now, we're saying this in the case where real estate agents have actually brought the client to us. If you have come to us directly, then we work with you directly on the final analysis, and the real estate agent partner that's working with us will be brought into the activity so we can talk about what we found. The acquisition strategy then is established through consultation with the agent and KeyLadder, again, depending on how the client, came to us. And we have already looked at our analysis of the program, generally speaking, using the listing price. Now, after that point, if it's possible to reduce that price or receive contributions, we will work this out during our acquisition strategy discussions. Then the offer is made, assuming that you, the client, have agreed that this meets your goals. Remember that goal slide already. The offer will usually request the seller to pay for repairs and part of, or sometimes all of, the closing costs. It just depends on the selling price of the home. If the home is selling for $300,000, for example, or if it's a duplex or a fourplex and it's up in the hundreds of thousands, it's a little easier to ask them to pay a larger amount for closing costs and that type of thing. If it's selling for $50,000 or $60,000, well, that doesn't leave much room for a large amount. Offers may be made at lower than asking price, although it's not common. Most properties are priced at or close to a market value. So we try to work with that, and if we can reduce that price, we'll do that. Once the offer is accepted, the closing process is started. Now, there's a pre-closing process, activities that take place after the offer is accepted but before closing. Now, after the process has been moving forward and credit approval has been achieved, which is usually about 2 weeks into that process, insurance is acquired. We already have a quote by that point because we've used it in our analysis, but we've then formally ordered the insurance. The loan's in processing, and the client's providing information that's requested. Sometimes they'll come back and ask for one or two things. Property inspection, then the formal property inspection will be completed, and usually that's by a third party to verify the condition for the lender and also for you, the client. Negotiations resulting from the property inspection. That means that when the property inspection comes back, if there are some repairs we believe that the seller should make, then this is a time when that's discussed between the real estate agent and the seller's agent. The property manager during this period of time would meet with the client, you, to review the management agreement, tenant rules, and the tenant agreement, set the rent rate, and inspect the property. Now, this is an important meeting because a number of things will be discussed. We have a list of tentative rules for the tenants, things that they should not do in the property. Those lists are adjusted somewhat for each property because not all properties are the same. One property might be a condo, another one might be a single-family residence, one might be a fourplex. The area where parking is allowed, for example, may be different from one property to the other. So all of that is customized by the property manager for that specific property. And then the owner has an opportunity, or client, to decide whether pets will be allowed, what that rate would be, and all of those type of things all take place here so that the property manager is ready to take over when the property closes. The forecasts for the remaining months in the year are created. And then a 12-month budget is created for the following calendar year. The forecast and the budget are important. The pro forma indicates what the property is likely to show as far as cash-on-cash return, return on investment, and other criteria. It doesn't explain when an item will be expended or when rents will be collected. Well, rents are typically collected monthly. However, at the beginning, you may start with someone who only comes in with a half of the month, and that you don't get the full month's rent. So all of that has to be factored into a forecast to tell you how much cash is coming in and how much cash is going out in each month from the first month when closing begins, and then all the closing costs will be loaded in there as well. So typically the first year you may not actually show a profit because all of the original closing costs, which are anticipated in the pro forma, are expended in the first month after the property has been acquired. The next 12 months budget is when things tend to smooth out a little bit because you don't have those initial acquisition costs in there, and you have the typical expected monthly income. Now, in the next 12 months, you will also see perhaps an increase in rents that were forecasted originally, for example, in July. And then you'll see that rental income come up. And if any other expenses were forecasted to increase over that time, such as property taxes, you'll see that as well. And you'll get a real good idea of how much actual cash you can get each month going forward. This is what we mean about planning it and making it a real business. Finally, the LLC name is decided upon. That's your decision. And then it's filed with the Mississippi state, and the quitclaim is prepared, which will be enacted after closing. The reason that we use the state of Mississippi is because it's inexpensive and it's easy, and we can have the paperwork back very quickly. Also, KeyLadder acts as a responsible individual for contact in the future. Closing comes at this point, and so after closing, the following activities will occur. The quitclaim is then filed with the county. Post-purchase analysis completed. It's important to look at how we forecasted at the very beginning through our pro forma, and then how it ended up at the end, both in the total closing costs, interest rates, any other things that may have changed during the process. We want to analyze the before and after. The property manager would be in the process of finding a tenant. Sometimes this can be done before closing when there's a fair certainty that nothing will prevent closing on or about the forecasted date. And then if there are tenants in place already, as we try to find whenever we offer a property to our clients, then we'll sign new lease agreements with the tenants, and those lease agreements will go from the purchase date to the end date on the previous lease agreement, unless it makes financial sense to ask the current tenants to extend those new agreements another year. A case in point, property was just closed on, and the tenant has only been in there for 60 days, but the tenant is one of those dream tenants that keeps a perfectly nice property, has even done some work in the yard and that type of thing. So the client had decided to offer them the opportunity to extend the lease out for an additional 2 months. In other words, a full 12 months from the time that the property closed until the lease extended, and they were happy to do that. Repairs that were not done prior to closing are accomplished at this point, generally before the tenants move in. However, if there are repairs that need to be done, even with the tenants living there, those are done after the fact. Sometimes that cash was provided in closing. Sometimes it's just understood and factored in that these are expenses that the client will have to spend. And then the recommendations for setting up the business checking account and free online accounting system are discussed and implemented. Now, it's important that this be a real business, and you're going to need a checking account so that the funds can go into it. We strongly recommend you do not use your personal checking account, that you set up a business checking account. We'll give you some recommendations on where we think the best ones, low cost, no cost accounts are. And then there are free online accounting systems out there. There's one that we prefer to recommend to you that is absolutely free, and it makes it easy for you to keep track of everything for tax purposes at the end of the year. Of course, if you have a CPA, then you can work with your CPA on that, and the CPA can have access to it as well. And then, as mentioned earlier, we go over the forecast and budgets presented to the client. This is really the case where we have some information to input into our original documents and see how that works out into the future. Property management's the next phase. Now, you own the property now and you have the keys. It's time to work with a property manager. The tenant rule should have been finalized by the client, along with the lease rates, the pet policy. Just keep in mind the lease rates were already loaded into our pro forma, and unless you have changed your mind or there's some compelling reason to increase or lower those, they would remain the same at this point. The manager obtains the keys to the property, installs new tenants or meets with existing tenants and discusses new rules. A client provides the manager with bank account information to transfer the rental income, and the manager provides access to the client for monthly electronic reporting. You'll be able to go in anytime you want and look at the accounts that the property manager has been managing for you. You can see the expenses month to date, year to date, any month, anytime. You'll see the income that's come in. Now, that is also transferred over to your accounting system as well, but before it gets there, if they've already had an expense, for example, for a new refrigerator, then you'll see that it's already there for that particular month. And keep in mind, the property management agreement does require that there's notice given to the client for certain expenses over and above the threshold that's in the agreement. There will be some planning for future rent increases, dates when that will happen for each one of the units if it's multi-unit, amounts that will be charged if a tenant leaves. Now, sometimes you have a tenant in there, for example, that might be paying $900 a month, and the property manager believes that when the tenant leaves, that property could go to $1,000 a month. And you discuss that, and the manager's ready to make that happen when and if the tenant decides to leave. Dates for the future rent reviews. October for January increases is typical, usually about 3 months in advance, and that's when the property manager will talk to our client about what they recommend for rent increases. And typically there's an increase every year, unless, again, there's a compelling reason not to do so. Maybe someone just moved in and they've only been there a couple of months and the new year rolls around and it's too early for that. Or the first year comes around and that tenant has paid on time and they have actually contributed somehow to the property. That's an entirely different discussion from today, but that's what's discussed. And then in summary, we discuss goals, we discuss the analysis, we discuss the offer, the pre-closing, the closing, property management, reports, ongoing management. The next steps are start a new property and when, and there's a 12-month evaluation that we'll go through with our clients at the end, of course, of the first year after they've made the purchase. We want to take a look at what we thought the return on investment and cash-on-cash return would be, what it actually is, and if it doesn't meet those requirements, what can we do to improve that situation in the future. About KeyLadder value. The Wealth Builder program is designed to deliver on the client's goals. Clients can and do earn more on some deals than the initial forecast indicates. A good example would be where we have used the actual asking price, and then it turned out that the real estate agent believed, and everything pointed to the direction that, for example, a $5,000 reduction in the selling price would be acceptable. It turns out that it was, and in that case, there is a better result than was initially forecasted. That's probably more typical than not. KeyLadder's fees represent a very small percent of the property return on investment. Unlike working with a real estate agent only, KeyLadder will have a continuing relationship through the interaction with the property manager and issuing an annual report for the first 2 years after the closing. In other words, we don't go away. Just because you have the keys to the property, we don't send you a thank you card and move on. That's what real estate agents do. There's a reason for that, of course. They have other clients to get to. But KeyLadder wants to keep a continuing relationship with our clients. KeyLadder is in a consultant role. We'll work with strategic partners to ensure that the client receives excellent service. We act as partners to the vendors to make the process effortless to our clients. It's important to understand that KeyLadder does not sell property. KeyLadder does not manage property. KeyLadder puts together the entire process with strategic partners. So when I mentioned the real estate agent a moment ago, they are crucial to the acquisition of property in the various jurisdictions where they have licenses. The KeyLadder investment basically is there's nothing free in life, well, at least for the most part there aren't, including our assistance to help you become wealthy through the acquisition and management of residential rental properties. We charge a fee. We don't sell real estate, as I mentioned. We don't make loans. We don't sell insurance or manage the closing process. All of these transactions are done with strategic partners. I'm reiterating this because it's very important that you understand that we're not real estate agents. We receive compensation from you, the client, or from the seller, or from the real estate agent. Now, in essence, the money actually comes from the seller one way or the other. We require a non-refundable payment to start with the remainder paid at closing. Now, we're willing to wait for closing. Generally, it takes about 3-4 weeks. Sometimes it takes longer than that, and that's fine. Some real estate agents have the seller pay for the fees, as I mentioned. That is more common by asking for funds back in closing. Now, sometimes the funds are described, sometimes they are not. But in essence, you, the client, are responsible for the balance of the fee, regardless of the source. We and your agent will be creative in trying to help someone else pay for this, of course. So this is the KeyLadder program and the Wealth Builder portion of the KeyLadder program. Finally, I want to come to the KeyLadder education. Our online courses will become available to the general public for the purpose of understanding real estate investments. KeyLadder clients will be offered a discount for any courses. I've mentioned a number of things during this conversation that dealt with many areas, such as taxes, for example. There's much, much more in the entire process of owning, managing rental real estate for building wealth. We would like you to learn more about this process and how we actually do it, much more than you just heard here in this introductory course, by taking our entire course. It's possible that down the road you might want to do everything on your own. Take our course and you'll probably be able to do that. In any case, you'll understand the process that we go through by taking the course. So those courses will be available at some point. We'll notify you when they are. They will end up on our website, and you will be directed to the course material site at that point in time. Thank you for your interest in KeyLadder. We appreciate it. KeyLadder is a Mississippi corporation, and Wealth Builder is our logo and style, which is copyrighted. Please contact us at any point in time. Email us or text us or call us if you're interested in the Wealth Builder program, or simply contact your real estate agent. Thank you.